Hello, everyone. I hope you're doing well. I wanted to provide an update on what's going on with the oil price. And of course, the financial market price is not the physical price that a lot of countries or wholesale buyers are paying for the oil. If we look in the market, we see crude trading at $91.70 currently and Brent trading at $92.71. So a little bit below $100 a barrel. But if we look at what the Wall Street Journal was reporting yesterday, when oil closed in the financial market price at $99, the physical price for oil is closer to $133 a barrel. So they point out that, if you want Brent crude that delivered in 10 to 30 days, the price is $132.74 a barrel compared with the futures contract price, the financial market price of $99. So you can see the disconnect there on the chart. So something important to note that, obviously the financial markets are, trying to price in the future and, you know, any day now, Trump could decide that this is all over, pack up and go home. Of course, it could get a lot worse. But let's have a look for so just something to be aware of. The physical, there's still massive problems for the global economy with the physical price being far higher than the financial market price, and that of course doesn't take into account potential shortages and other. Let's say geopolitical conflicts. Maybe some nations are not going to want to trade with others. We've already seen the Chinese cut off some exports of refined products of, jet fuel and things like that. So maybe other nations will do that. But let's have a look at a daily candlestick chart, and we could see that, for me and a lot of my clients, we obviously didn't get the high in the oil price. It spiked up well above $100 a couple of times, but I can't give advice in these videos, but I've certainly reduced exposure for clients. But if we have a look, we've got negative divergence on the momentum indicators, the MACD and the RSI. So notice the price of oil was trending up. We could see the price making higher highs while the momentum indicators were topping out. So that was clearly a sell signal. And you could even, depending on how you want to draw this, you could say that this was the beginning of the trend there and it's somewhat holding the trend. Although even if that was the case, this is a broadening wedge pattern, which is generally a bearish pattern or a sell pattern. And it was certainly a sell at the top of the range. If you're bullish oil, or if you had no allocation, or if you're concerned about what's going on in the world at the moment, this would probably today be an aggressive trading buy entry. Again, not giving advice to do that, just pointing out the trends on the chart. But if we zoom in a little closer, let's go to a 4-hour chart, because a lot of this is happening, in a relatively short time frame, given what's going on in the world. We could see that around the $116 level, there was a clear top there. We got the top on the 9th of March, briefly spiked to 119. We got the top there again. So that's clearly a resistance level, at least for the time being. And you can see if we draw a little trend, so this, obviously the conflict started on the 27th or 28th of February, I believe. We can see that in the price, the big run up. And then, of course, the trend was established here. We had the initial sell off down to high 70s, so around $78 a barrel. You can see the uptrend was maintained. And it looks today like, on the shorter term chart at least, that the price is breaking down from this uptrend. So I'm not, right now, I would say I am neutral on the oil price. I think above $100, it's probably a trading sell. And I think if it gets, down to these lows again, or certainly for more aggressive clients, we can see this previous low from a couple of weeks ago, sorry, from late March, which is about 3 to 4 weeks ago now. We can see this would be a relatively aggressive trade entry. So I talked about today being an aggressive trade entry for someone who doesn't have allocation to oil and wants it. There's, you could say, keep in mind, the shorter the time frame, the less reliable the signals, but we are starting to see a little bit of positive divergence there on a shorter term chart. But obviously on a longer term time frames, daily chart being more important, weekly charts being important, we're not seeing that just yet. But the case could be made that the uptrend is losing momentum. Aggressive buy entry, but certainly if we get back down to here, and then I would have to assess what's going on with the Iran conflict. But if there's still potential for that conflict to flare up, and the oil price did briefly trade around this low $80 range, I would probably at that point be more bullish, and at that point we might be seeing a more, let's say, dominant or more, a stronger signal on the momentum indicators. And then we'll see something similar with the Brent price as well. If we go to, if we go to a daily chart again, you can see that 109, 110, let's call it $109. Clearly, like, spike high there on the 9th of March. Let's zoom in so you can see a bit better. Top there, top again. And then as it was hitting that same price level, we saw negative divergence. So this is a sign that the uptrend had run a bit too hard and there was probably time to lighten positions. So if you're a client of mine watching this, you know, we've had many conversations about this privately and we have somewhat reduced our exposure. We didn't get we bought at quite a low level. If you look at my previous videos from 6 months ago or so, obviously I did not predict this Iran conflict and I'm not claiming to have done so, but I felt oil below $60 or around the $60 level was significantly underpriced, especially relative to other commodities. You know, we saw those massive massive run up in gold, silver, copper, stock markets hitting all-time highs. And if you go back to my videos from 6 months ago, you'll see I was making that case, and now I'm sort of making the case that, you know, I for the last couple of weeks, I've sort of said that you know, above that $100 levels is probably a sell, and the Brent price is certainly confirming what I've said. Four spikes above the $100 level and back down to 92 today. Now this chart not showing. There's not a whole lot to look at here on the daily chart. I wouldn't call that a downtrend. I mean, it's just sort of choppy trading activity for the time being. Let's try a 4-hour chart on the Brent. We can see there's some gapping in the price. You know, normally gaps get filled, and well, it pretty much did there. Again, not a whole lot to go off there. So, you know, if we're looking at the Brent price, we might say, you know, again, too early to be looking for a clear direction. Obviously, someone who's very aggressive and is concerned about what's going on in the world and has no allocation to oil, maybe it's a buy around these levels. But that chart to me doesn't tell a whole lot. And if we look at a weekly chart, well, we're not going to see a whole lot there other than, you know, something I've pointed out longer term. The oil price was in you know, a very sustained decline, relatively underpriced. You got a massive falling wedge there on a weekly chart. I mean, that if that's not a strong buy signal, you know, around these levels, you know, below that level, around this, you know, talked about the $60 level, clearly a strong buy there. So, hopefully that gives you a little bit of a summary with where the oil price is at least in the short term. Charts are looking a little bit messy there now, but just keep in mind the financial market price, the futures contract, you know, the paper price, I guess you could say, of oil is significantly lower than what the physical price that a lot of nations and wholesale buyers of oil, you know, refineries are having to pay to get the oil, assuming they can get it. In many cases, there is, you know, we're seeing some shortages. We're seeing in Australia our Prime Minister, now he's not begging for oil, he's begging for refined products, so for petrol, diesel, and jet fuel and fertilizer products. But certainly in the physical market, there are some problems. So hopefully that provides a good summary. Thank you for listening, and talk again soon. Cheers.